We're here at the MIT Sloan Sports Analytics Conference in Boston. A lot of the biggest leaders in the technology space in sports are here at the conference. One of them, no surprise, it's DraftKings. And I'm talking with Jason Robins. He's the CEO and co-founder of DraftKings. Thanks for joining us here on CNBC.
Thanks for having me.
I got to get right into it. Sports gambling changing the entire game right now over the last several months with what the Supreme Court's going to do. How are you guys changing your whole company to get ready for that decision?
So, it's one of those things that we think, much like any big decision that's out of your control, we can only do what we can control, and that is to be ready. And what I mean by that is to be ready to have the best possible product in the market, to have the right partnerships in place, and to make sure that we're able to serve those customers if the Supreme Court allows it and the states allow it. And we'll go from there. If it doesn't happen, then I think we'll still feel pretty excited about what our prospects are in fantasy and in the other areas that we're focused on the media side. But sports betting is a big market. It's already, I think, in the black market in the U.S., 150 billion, I think, is the number I've seen that's wagered illegally in the U.S. each year. And I think it's time for that to come into the light.
If they don't legalize sports gambling, let's say the Supreme Court does something that most people don't expect to happen, they keep things the way they are, what happens to some of the big growth plans that you guys have, where I know you're expanding a headquarters or hiring hundreds of people? Does that get derailed? Do you find different uses for that expansion? How do you guys adjust if it's plan B?
Well, I think that obviously there's different things we'd be focused on, but we're still at such an early stage of our company that growth has to be the plan. And, I think the worst part will be we'll spend some time on something that we don't end up being able to use in the way that we thought, but that's okay. We'll still have many things we can work on. I think fantasy business, we still only have a small fraction of the total people playing fantasy sports on DraftKings. There's almost 60 million people playing fantasy sports, and less than 10 million have ever registered for our platform. We also have a ton of things that we're doing on the content and media side that I'm very excited about. One of the cool aspects of what we do is that we're a platform, and we're a platform that can do financial transactions with customers. We have all the data that we need, the credit card saved, things like that.
So who's paying who? Like you and me are playing together and I pay you if I lose, that kind of thing? Or you're paying a vendor for content?
Well, more I would say, you look right now what's happening in media, in particular in sports media. Everyone's launching an OTT network. Everyone's trying to go direct to consumer, and we can help with that. We're not going to get into that business directly ourselves. That's not a game that we think we should be playing, bidding on sports rights, things like that. But you take everybody else who's made those investments, who are now trying to build subscriptions, build OTT products, and grow their direct-to-consumer business. We have everything they need to be able to do that. So we can partner with the right ones. We will work with as many that make sense. And for us, the goal is twofold. One, it's to be able to help our partners, but also it's to provide a better experience to our customers. And we think being able to have our customers seamlessly transact across a number of different integrated partnerships that we have is a good thing for them.
You guys have been up, you've been down, you're up again. It's very volatile in your business. When all that daily fantasy stuff was happening 2-3 years ago, now it's the legalized sports gambling across the nation. Is there going to be a time where it's all just together, where we're not worried about whether daily fantasy is technically gambling or not because it doesn't matter anymore? Like, are you hoping for a day like that, or do you still like keeping those two businesses separate?
Well, I think they're different products, so I think they should be treated differently. But, part of being up and down, starting a company is being up and down. I can't think of any company that doesn't experience that. Take all the great companies now, the Amazons of the world, that one time in the late 90s, early 2000s, they were cratering with the tech bubble bursting. I bet at that time it felt pretty awful. Right. And then, it took another 10 years before they were going back on the rise again. And now look at them. And even now, I bet they're nervous. Can we compete with Google? Can we compete with Apple? So, part of running a company, and part of it, especially when it's the company you founded and you care, about it probably more than anybody possibly could, is dealing with the ups and downs. You just can't let any of that get to you. You got to keep pushing forward and keep following your long-term vision.
Are you concerned that if gambling becomes legal, that might cannibalize DFS customers because they'll all just go over to that?
Maybe over the long term, but I think in the short term it'll build it because it'll mean more people coming to our platform. And I've seen generally a positive correlation between, so if you look at the last few years in Vegas, as fantasy has been growing, sports betting has been on the rise. I think that as people get more into sports, they're doing the same research, they're thinking about it the same way. It makes for a bigger overall customer base. And part of what we do, being really good at using data to cross-market to people, we should be able to build both businesses, and they should have a virtuous impact on each other.
There's been a lot of talk about whether leagues should get a percentage of revenue. When you see that from your perspective, if that were to happen, does that actually hurt your bottom line? Because that's just less money that goes to winners, or goes to pay taxes, or goes to shareholders.
Well, I think the leagues are going to need to incur some new costs, and I think that, you know, I can't argue with that. I get why they think they should get a piece of the revenue. And at the end of the day, I think everything will get worked out where a great product can be offered to consumers, and all the stakeholders, including the leagues, will feel like they're fairly compensated as well. And I believe that's absolutely possible, so I'm not worried about that.
Okay. Thanks so much.
Thanks
Appreciate
for
it,
having
Jason.
me.
That was Jason Robins, CEO and co-founder of DraftKings, here at the MIT Sloan Sports Analytics Conference in Boston.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.